Hello, my name is Lindsay. Welcome if you're new here, and welcome back if you've been here before. I am grateful for every single one of you. If you haven't subscribed yet, go ahead and hit that subscribe button. I'd love it if you join me more often. Anyway, today we're going to talk about a little something different. I usually have cash in hand for cash stuffing, but today I'm just going to talk about some things that my husband and I have set up in our finances that happen automatically to keep our lives a little bit more simple and to make sure we hit our financial goals for not only for the year but for our future. So, to get started, we're just going to start with automated money actions. And the first thing we're going to talk about is the employer sponsored plans that come out of our paychecks pre-tax every single time we get paid. So my husband has a 401k that is employer sponsored. He contributes 10% every out of every paycheck pre-tax, and his employer contributes 5%, which is its match. And again, that is the pre-tax amount of his earnings. He also contributes to an HSA. Now, this is also pre tax. There's obviously no match to that. And I believe for 2025, he has opted to contribute enough to max out the annual maximum for contributions. For myself, I also have an employer sponsored 401k and I contribute 12%. Plus, my employer contributes 33 cents per dollar that I contribute up to a certain amount. I think it's 2,500 a year. I work for a nonprofit, so it's a little bit different. So after those come out, our paychecks are direct deposited into our main joint account, and it happens once a week on Fridays. Now, we don't each get paid once a week. My husband and I both get paid bi-weekly, but they're offset. So every other Friday he gets paid, and then the other Fridays I get paid. So it's kind of nice having a paycheck come in every week. The paychecks are, of course, different amounts. We have very different jobs with very different salaries, but it is nice to know that every week money is coming in. It's a little more complicated with budgeting by week. So, yeah, it's a it's a good problem to have money coming in every week. After the checks hit our bank account, that's when the main savings transaction happens. That happens again once a week on every payday. Again, my husband's payday, more goes into our main savings account. And on my payday, it's a little bit less, but it does happen every week on a regular basis. And this main savings is our main emergency fund. It is there in case we need something in terms of one of us can't work, something comes up. So, like last fall, with the passing of my mother-in-law, we needed to dip into this savings for various things, and we're working on building it back up. So it's not just for loss of income, it's also to pay for those things that happen in life. Oh, we need this massive car repair, or we need to pay for various family expenses that are out of the norm, like a funeral. So that's what that's for. But every week we have money going into that. My savings, I have my own separate savings account. My husband has one of his own, which he manages 100%. I don't know how much is in it. I think he puts a certain amount, like I think I know what the amount is that he puts in from his paycheck every week. But I never see that because it's separated out from direct deposit. I have the same that happens with my accounts. We each have separate checking and separate savings, and joint checking and joint savings. So we divide our paychecks to put a little bit into our own checking and savings, but the majority of it goes into the main account. But anyway, my savings, Bi-weekly on my payday. I don't contribute on his payday. And it's a smaller amount, but it adds up over time. And I've used it for various things that I want. So I've got a new laptop last fall, and I used money from that savings to purchase it. So I use it for various things like that. And if I don't have anything I am specifically wanting, I just let it accumulate in there. We have a high yield savings account, and that happens. Money goes into that every week. Again, on the larger paydays, more goes in. On my smaller paydays, less goes in, but it's always the same amount in terms of, bi-weekly, it gets this amount. And then the alternate weeks, the alternate bi-weekly weeks, it gets another amount. It's set, it's automatic. That happens on Thursdays because this is the the high yield savings account is in a different bank than what our paycheck direct deposit account is. So just the timing of that, it ends up being on a Thursday. I wish it was the same day, but it's not. Then we have, I'm going to move this up. Then we have our Roth IRA contributions. That comes out once a month, and we have enough going in where it's not going to quite max out both my husband and my IRAs for the year. I believe we are gonna have about $200 each shortfall on that. So what we'll do towards the end of the year, towards the end of the calendar year, is we will work with our financial advisors to get the exact amount to contribute as like a lump catch-up amount. But that comes out monthly, and that is automatically invested because of how we have it set up with our advisors. They have a certain amount. They have the amount go into a certain fund, investment fund that is recurring every month. We have a small brokerage investment account. This is a taxable brokerage account, and it gets a small amount every month. This amount is not automatically invested. I've been thinking about setting that up because that would be just one more automatic thing to do, which would mean we don't have to think about it anymore. If I do that, it will probably be in an index fund, such as a total stock market index fund or an S&P 500 index fund. But we'll see if that's something I want to do. We also, because of the nature of my husband's employer, we have to declare what our investments are, and just to make sure we're not committing fraud. Not that we would know how to do that, but it is just part of his employment. So I'm not sure we can really even do auto investments in this account. And that is it. That is our main automated money actions. Now, obviously, we have some automated bills come out of our account. These are all additions, but we do have, like, our internet is on auto pay, our cell phones and trash and water and what else? Car insurance, all of those are on auto pay. Of course, all of our subscriptions, Disney Plus, Amazon Prime, all of those are on auto payments too. But these are all the positive money moves that we make. It is nice that the payments are also automated because we don't have to think about those. We just have to make sure that we've budgeted correctly for the month or for the week to make sure the money is actually in the account that the auto debit is from. But yeah, so with the automated money actions, one thing that I've heard from various money minds, money gurus, money financial advisors, people in the personal finance space, is that the more you can automate, the more human error you can take out of the equation. So when we have a certain amount going into our 401ks, before we even see it hit our bank accounts, this is money that's not ours. I mean, it is. It's future. It belongs to future us. We can't touch it without penalties, and I don't want to take penalties if I don't have to. So that means we can't spend this on a night out or something from Amazon or something that is fleeting, right? We can't blow the money on something silly. With our savings, my main savings, my savings, and the high yield savings account, even the brokerage, all of those have some layer of barrier to using that money. With the regular savings, my main savings, and my savings, I have to actively transfer those funds out of the account into the checking account to use them. And that gives me that pause to go, oh, is this actually worth it? Do I want to take out of the savings account for this new sweater or whatever? I don't know. That's just an example. So it creates an obstacle. The high yield savings account is in a completely different bank. So I really have to think, and it's up to a 3-day wait for the funds to transfer into my checking account. So that's an even larger barrier. For the brokerage, we have to sell something. So sell some of our index funds or single stocks or ETFs, and then do the same thing we do with the HSA, is then transfer that money to our main checking account. And that's just, if we don't need to do it, we're not going to do it. It's easier just to let it be, but it's there if we need it. The same with the high yield savings account, main savings, and my savings. It's there if we need it, but we have to take additional steps to use it, thus creating that pain point of having to actually do it, right? So, and then with the Roth IRA, again, we would have to work with our advisors to make sure we can take money out without penalty or take the penalty. And this is a retirement account. So this belongs to future us. Anyway, those are some money actions that I have going on that have helped simplify my life. And if you have any automated money actions, I would love to hear from you. Or if you have any ideas of any additional things that I can automate, I love automation. I mean, there's some things that I don't have automated. I don't have our credit card payment automated. I pay it off every couple of weeks on payday just to keep it a zero. I also don't automate our mortgage payment, our house payment. That is something I send specifically. I mean, I do it through online banking, but I set it up and manually every single month. And I usually do it on my husband's last payday of the month, just because he's got the larger amount. So there's a couple of things that I just haven't automated, and I've chosen not to automate them because I want to have a little bit of control over some of those things. But the savings, having those automated, has definitely helped us reach our savings goals. And as we continue to move forward, if I get another raise, did I tell you I got a raise? I got a raise. That's why it's 12%. That's right. At the end of last calendar year. So at the end of December, I got a fairly sizable raise, not like amazing, but definitely better than an average raise. So when I decided to bump this up from 10% to 12%, because I want some of that money to just not be seen by me. I'm hiding my savings so that I'm not tempted to spend it. And that's what really all this is to keep me from being tempted to spend it on something that I don't value because I'm a spender. Like naturally, but I try to be frugal. I have frugal mind, spendy heart. How's that? Frugal mind, spendy heart. I like that. So anyway, let me know what automated money actions you have or any ideas you have for any actions I can add, and how they've helped you meet your money goals, or how you hope they'll help you meet your money goals. If you like this video, I suddenly lost focus. There we go. If you like this video, give it a thumbs up. Oh, maybe it's this. If you like this video, give it a thumbs up. If you haven't subscribed yet, I would love it if you hit that subscribe button. And if you have something you want to say to me about the automated money, about anything, whatever, and just keep in mind, I am not a financial advisor. So this is just what I do and what works for my family. You do what works for you and your family. Don't take my advice. This is not advice. So, anyway, put anything in the comments below. Keep it nice. And I will see you next time. Have a great rest of your day. Day or morning or evening or night or whatever time of day it is. Take care.